Good morning, and welcome to Storm Stock Solutions. I'm Grant Mercer. It's just before the opening bell here on Wednesday, and our job, as always, is to bring a little clarity through the chaos before this market gets moving. Let's start with the big forces shaping the tone. According to reporting from MarketWatch, small-cap stocks have been in a record rally, but there's a yellow flag out on the horizon. One money manager points out that rising Treasury yields could become a real headwind for that trade in 2026, even as small-cap fundamentals are finally improving. So you've got a classic push-pull. Better earnings and balance sheets on one side, the cost of capital creeping higher on the other. For our today's session, that keeps the focus on whether this small cap momentum can keep running or starts to look a bit stretched. On the macro and policy front, one story that bleeds straight into sentiment is Nvidia and US-China chip policy. MarketWatch reports that Nvidia stock is now largely shrugging off former President Trump's approval of renewed chip sales to China. Some analysts see a big opportunity reopening in that market, while others worry that this is just a temporary detente and that new geopolitical roadblocks could reappear. For traders, this matters not just for Nvidia, but for the broader AI and semiconductor complex. Are we in a more open regime for cross-border chip demand, or is this just a pause in the tech trade war? Now let's talk about areas of strength that the traders are watching into the open. First, that small-cap theme. The rally in the Russell-type names has been fueled by the idea that earnings and credit conditions are finally turning the corner for smaller U.S. companies. The MarketWatch piece highlights that fundamentals are improving, which is what you want to see under any strong move. But with everyone suddenly rediscovering small caps, professionals will be watching for signs of crowding and whether they've already priced in too much good news for a 2025 DAT pair. CVS Health is another bright spot. Reporting from MarketWatch says the stock rallied more than 2% after the company once again boosted its 2025 revenue and profit guidance and laid out expectations for 2026. That's the kind of steady, guided growth that big money often seeks late in a cycle. Clear visibility, recurring cash flow, and management confident enough to raise the bar. Traders will be watching if that strength spills over into other managed care and pharmacy names as the session gets going. And circling back to the AI theme, Nvidia is still central. Even as headlines swirl around policy, the fact that the stock is shrugging off the latest development tells you positioning is key. A lot of the near-term news may already be built into the price. The broader AI chip complex, plus upstream suppliers around cooling, power, and infrastructure, remain areas of interest where strong demand narratives are running against valuation concerns. On the flip side, let's talk about some of the weak spots and areas to handle with care. GameStop is back in the news, but not for a meme-style surge. MarketWatch notes that its sales have dropped more than 4%. And its Bitcoin holdings and crypto-related activity have also slid. That's a reminder that when the speculative froth comes out, companies that leaned on hype rather than core operating performance can face more questions than answers. For traders, GameStop sits in that high volatility bucket where sentiment can swing on a dime, but the underlying business trend isn't doing much of the heavy lifting. Another area of fragility sits in the background of that small cap rally. Interest rates? That small cap piece essentially argues that if Treasury yields push higher from here, the smaller, more leveraged balance sheets could feel the pinch first. So even if we don't have a big data release this morning, rate expectations in the Treasury curve remain the invisible hand under a lot of these moves. Let's hit a couple of under-the-radar stories that I'm keeping on my watch list, not as recommendations, but as setups that could matter if conditions line up. In consumer and restaurant land, Cracker Barrel is an interesting one. MarketWatch reports that after the company backtracked on a remodel and logo change amid social media backlash, it's still facing unique and ongoing headwinds in the business. That's a useful case study in how brand risk, customer demographics, and execution all collide. If we see any renewed volatility in restaurant or casual dining names, this will be one of the tickers pros look at for read-throughs on Middle America consumer demand. And in crypto, there's a quieter but important tone shift. According to Francis Yu at MarketWatch, Standard Chartered has just cut its year-end Bitcoin target in half, from $200,000 down to $100,000, even as Bitcoin itself was climbing yesterday. That's still an extremely bullish target in absolute terms, but the direction of travel tells you something. Even the optimistic institutional calls are moderating. For traders in crypto-exposed equities and miners, that's the kind of narrative change that can influence positioning and risk appetite into year-end. So, to sum up for the open, small caps are coming in hot but bumping up against concerns about future yields. Nvidia and the AI ecosystem remain at the center of the macro tech story as US-China chip flows evolve. CVS highlights steady strength in AI, healthcare. GameStop and parts of the speculative complex are flashing fragility, and in the background, restaurant names like Cracker Barrel and shifting Bitcoin targets are quiet barometers of consumer and risk sentiment. I'll be back with intraday updates once the market is underway to see how these themes actually translate to price action as the dust settles on the open. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.